This is Michael Reeder, CPA, and owner of Reeder CPA Group. Welcome to Reeder's Playbook, where I talk with industry experts about practical strategies and insights to help business owners and entrepreneurs level up. Today I'm joined by Markel Vega, Senior Business Consultant with Naturals2Go, a leader in the healthy vending and unattended retail space. Markel helps individuals and investor groups launch and scale vending businesses that align with their goals, whether part-time, full-time, or semi-absentee. Markel Vega, Naturals2Go. It's great to have you on, my friend. How you doing?
Pretty good, man. Loving life, growing a business, growing it, helping others grow business. It's a beautiful life to live.
Yeah, so Naturals2Go. I mean, we're going to dive into Naturals2Go today, and because there's lots of synergy between Naturals2Go, a vending machine opportunity, as well as Reeder CPA Group, a CPA firm, right? And how vending machines are treated for tax purposes. That's a lot of stuff that we're going to unpack today on this episode of Reeder's Playbook. But you've got other stuff going on, right? Like you're a pretty multifaceted entrepreneur, if memory serves me correctly.
Yeah.
What else you got going on, man?
Yeah. And, my biggest business outside of the vending business and the consultancy is raising two young boys. That's I jokingly say it's a business, but you got to keep eye on those KPIs. You got to make sure things are working well. You got to course correct a lot. Get back in the trenches with them. So it massages a lot of what business goes on. But yeah, built a home and going into a new community, never lived here before. Really attacking this thing that we call vending from a perspective and a standpoint that a lot of people will definitely resonate with. Even if you're not new to your area, being new to a business in your area can make you feel like a new person in where you're at. So really helping people understand it and walking that walk, not just, and not just talk, but walking the talk as well.
Absolutely. Yeah, great stuff, man. So tell the audience about Naturals2Go.
Yeah, Naturals2Go in a nutshell, it's industry-leading brand. We win accolades, awards. You just look us up, you can see it. It's one of those brands that really fits a lot of molds. When you look at business and you take a step back and you say, okay, I want to buy a business, but what's that business going to do for my lifestyle? That's what Naturals2Go is. It's a lifestyle brand. It's a brand that can really mold and shape into whatever you need it. And we'll get into some of that in a bit. But Naturals2Go, 30 plus years in business. Naturals2Go itself, world-leading industry leader. 250 plus owners going into market annually. We have about 9 trainings every year with about 35 people in them. So you could just see that demand. You could just see what we're doing to markets and really giving people a 21st century facelift to an industry that's been around forever. In Naturals2Go, it was one of those brands that kind of caught a lot of people by surprise because it was an industry that was starting to grow rapidly about 13 years ago when people started to become more health conscious and what's going into my body. Not to say Naturals2Go only lets you sell healthy product. It's the machinery that you have access to, in addition to the vending that you see out there. It allows you to sell those perishable items. It allows you to sell, even some non-food items. Yeah. So Naturals2Go, it's I don't like using the term business in a box because then everybody starts thinking passive and they can just throw money at it and sit back. It's a business that over 60% of the employees that operate the day-to-day actually own. And I'd be remiss if you can name me 5 businesses out there that have that exact same stat, that over 60% of the people who work, the employees who work in the company, myself included, also use the platform for their own business. They've invested their own time and their own money, and they put in their own family stake on the pedestal, so to speak, to build this brand. In Naturals2Go, it's just star-studded with support. Our engineering team, some of the individuals on that are world-renowned. They sit on panels, and that's where all the machines are born from. Individuals going down to Washington to advocate, vending, it being an essential business. It being, NAMA, the North American Merchandise Association. All of these things that Naturals2Go goes above and beyond. We're a company that really sets the bar. And it's not because I'm wearing the shirt that I'd say that. I come from the finance world. The numbers don't lie. People typically do. You look at the numbers. 60% of employees own in business. 2,500 plus operators deployed. 30 plus years in business. Better Business Bureau A+ rated. SBA relationships for 15 plus years. They've built out templates and systems just for us. So you see that and you say, okay, well, what's Naturals2Go really doing? And you see all the accolades and the awards that I mentioned earlier: responsible growth, fastest growing company, et cetera, et cetera. It's a great place to be.
Yeah, that was very, very informative, Markel. Thank you. You mentioned something, and maybe I heard you wrong, so apologies if I did. But you mentioned that the technology, like, so Naturals to Go, vending machine business, it's in the vending industry, and you mentioned the machine, like the technology beyond the machines. Is there any specific technology other than just the machines?
Oh yeah, yeah, and that's really the secret sauce, and it's really the back end, that operator not just getting feedback from their machinery saying, "Hey, my inventory levels are low," but also saying, "Hey, people are buying product A based on 2,500 plus data points with all their machinery and all their SKUs, and SKUs another term for products out there. We know what works in complement with these products." Helping you being able to dial it in. That's really I always tell people it's not a vending business. It's a food and beverage technology business. The machinery, the back end technology to help you manage that inventory, knowing what to buy and when to buy it, who to buy it for, who's going to consume it. That's the real secret sauce. And there's so much on the back end. It's called a VMS, or vending machine software, vending machine system. People use the terms interchangeably, but it's what's happening behind the scenes to make sure that operator can run that business efficiently. Someone needs a refund, you don't have to go to the machine to give them $2. You click a button on your phone and they confirm the last four of their card with you over the phone. Product gets stuck, you can make that machine manually rotate so it dispenses that product if maybe you missed the row when you were filling your machine. There's so many little nuances, but then again, to that first point, 60% of the company being operators, you have a lot of real-time in-the-field insights coming back that are being approved and passed through, whether it's technology or the contracts or the supports that are being built in a lot of areas right now based on that demand.
Wow. Yeah, I mean, my head goes to, like when you say it's a food and beverage business as well as a technology business. Like my head just goes to Uber because like the strength of Uber's technology. And I own a CPA firm, and I actually have a lot of clients that are W2 employees that work for Uber, right? And they're making crazy amount of money, and it's because they're the engineers that are building the software. And so it just seems like Naturals2Go has a lot of brain power going into building a really great technology that really helps the operators thrive.
I mean, this year alone, we've acquired 7 companies, 7, all based on back end systems, technology, and always keeping that bar, setting the bar, not just reaching it, but setting the bar. And we put our money where our mouth's at.
Yeah, I love it. Well, so here we are, it's Reader's Playbook, right? And so, the common theme on our episodes is all related to tax. And so everyone listening, Markel and I we're recording this audio in November of 2025, right? So what time is it, right? It's Q4 year-end tax planning season. And that's actually, so Markel, like, this is actually one of the busiest times of our year. Like, yeah, like we're busy January through April with regular tax season. We get busy with extension tax season from mid-August to mid-October. But, like we're just as busy, if not more busy in Q4 because of all the year-end planning. And a big cornerstone of the year-end planning at Reader CPA Group, because we work a lot with entrepreneurial clients, a lot of existing business owners, but also a lot of new business owners. And so we work with a lot of people that are going into business for the first time. And so a lot of people that cross my desk, that cross the desk of other advisors on my team, these are people that were making 6 figures in calendar year 2025, or they still are, or they still are and are about to resign, or they got laid off, or they got a big severance, or they're going to keep working it, but then they also want to do something entrepreneurial in addition to the job. Like every different avatar applies, right? And so, but a big thing, because Reader CPA Group is a CPA we're an entrepreneurial CPA from for entrepreneurs, and so we like one of our biggest playgrounds that we play in, so to speak, are the business for sale marketplace, right? So whether people out there want to buy a new business, whether it's franchise or independent, a resale business, they're just the business for sale marketplace is where we get a lot of our leads. People that are buying businesses, whether it's franchise or independent. Naturals2Go, as we know, is not a franchise, but it's a business opportunity, and it's very fixed asset intensive, obviously, because of the machines. And so there's naturally a great opportunity for tax planning here, right? And so one of the things that we always say at Reader is that we don't want the tax tail to wag the dog. We don't want to just do something for the tax write-off. We want it to be a good investment as well. And everything that you're saying, and the reputation, the track record of Naturals2Go, it's a great business opportunity. It's a great investment opportunity. And so when that's present, which it is with Naturals2Go, then when you can also layer on top of that, oh, by the way, there's also some great tax benefits. It's huge. And so like we'll go into that for a little bit. So for example, like if someone, we'll just say, we'll call him Tommy, right? If you got like if we have a mutual client named Tommy and he's looking to go into Naturals2Go and he's making $250,000, like $125,000 to $250,000 on the W-2, and that's it. Depending on what state he's in, can't really do much with that W-2 income in terms of write-offs. And then like, is he subject to federal and state? That depends on what state he's in. But regardless, he's W-2. So regardless of what state, it's just the fact that he's W-2, that there's really not much that he can do with with deductions, with reducing his tax liability. However, if he were to start up a business, and if he were to start up the business, and again, in the theme of Q4 year-end tax planning, which is where we're at now, everyone, as Markel and I record this podcast, there's an opportunity to set up an entity with the last few months of the year and to build up a tax loss to try to front load as many of the expenses as possible in calendar year 2025, and to have that tax loss flow through to and get reported on the personal tax return of our friend Tommy, right? And then that loss is going to offset his W-2 income. And so some things to unpack there, right? There's, I just said flow through. And so I'm a big LLC fan because an LLC is a hybrid entity for tax purposes. And so an LLC with one owner by default is taxed as a sole proprietorship. An LLC with two or more owners by default is taxed as a partnership. At any time, either initially or subsequently, the LLC can be taxed as an S corporation. Now, what did those three tax classifications have in common, right? Sole proprietorship, partnership, S corp. They're all what are known as flow-through entities for tax purposes. So if our friend Tommy were to, invest in a Naturals2Go hypothetically in Q25, sets up an LLC, gets the machines, and do some other stuff that we'll talk about, he can build up a tax loss. And now a big thing about the machines that's really strategic here is that they qualify for accelerated depreciation. Now, there's two types of accelerated depreciation. There's bonus depreciation and Section 179. What are the differences between them? I'll get to it. But then also another big thing that happened recently as we're in 2025 is the passing of the Big Beautiful Bill. And the Big Beautiful Bill brought bonus depreciation back to 100% at the federal level, effective January of 2025. So all of these things are my, long-winded way of saying that Naturals2Go, because of the combination of the accelerated depreciation of the fixed assets for the machines and the ability to, as Markel said, leverage the majority of the purchase with, for example, like SBA financing, then you're able to start a business, not come out of pocket for the entire investment, get a great tax write-off, and also invest in a viable business, and then do some other creative things that we'll dive into in terms of strategic tax planning. But, so for me as a CPA, my spidey senses always get, amped up, like they always pop up. And, like whenever someone is going into a fixed asset intensive business such as Naturals2Go, and then when it has such a great reputation like Naturals2Go, it's really exciting because there's lots of tax planning that can be done for that type of business, especially if that person is earning W-2 income and as we're approaching end of year. So I'll pause there because I know that your synapses must be popping on all cylinders as well, Markel, after hearing all of that.
Oh yeah, and one thing you said right out of the gate is, a lot of W-2, it's their first time owning a business. So they're kind of like, okay, business ownership, that's foreign to me. Now you're talking to me about taxes, and the only thing I've ever had experience in taxes is seeing my gross number, all the little deductions, and then the net. And it's always less, and it always makes people like, well, what the heck? Why are they taking all this money from me every year? And I'm working my tail off here. And that's a big thing about Naturals2Go is it's a lot of people's first business. With especially, like you said, Tommy there, having kids, for example. I've got two boys myself, 5 months and 4 years. Being able to pay your kids on payroll and make that a tax thing, being able to include them in the business and just teach them those things. And it's a first business. And the reason it's a first business is because vending isn't rocket science. Unattended retail isn't rocket science. It's just how you do it, going that extra mile, putting that state of the art, world class spin on it. That's really where Naturals2Go shines, and that's such a great crossroad when you think of the accelerated depreciation, the ease of being able to wrap your head around it as a first time business owner, but then also how easy it is to include your children in the business. And that's something that you don't see a lot of businesses out there where you're able to, essentially, I compare it to turning the lights on in the morning when you're brushing your teeth or using the restroom. And you turn on the lights and they just flash on. It's a little, you can't see for a second. But if you got some dimmable lights that turn on slowly, that's how this business is. Where you don't have to go out and get employees. You don't have to go out and get a commercial real estate space. You don't have to go get a bunch of licenses. There's not all this stuff you got to do before you bring on your first customer. And it's a great business because of that scalability, both forward and backward. You get too busy, the kids go off to college, sell a part of their route, pay for their college, and keep a bit of it for yourself because it's your baby. It's a thing you like to do. So that's a beautiful thing in that situation specifically. That first-time business owner entering this space, especially having so much at stake, their livelihood, their children's childhood, their home. This is a great business for it because you don't have to. There's not a lot of capital that you need to get started. As you get going, you're going to want capital, but it's one of those great businesses that like you said, SBA. There's a lot of ways to really leverage OPM and other people's money to really scale this and enter this business.
Absolutely, yeah. This is not naughty by nature with OPP. This is Markel and Mike just talking that real tax talk, OPM, right? And we both love OPM.
Oh, yeah.
And so I love it. I'm going to go listen to some Naughty by Nature on the drive to the gym this evening. And so the 5 to 7 go-to things here, right? And we can, and in terms of go-to tax strategies for year end that apply to any business, especially, startup business. But what we do at Reader is this time of year, we go into every year-end planning meeting with our clients. And again, several of our clients are new business owners, either about to be business owners or they're still within their first year. We go in with a checklist of 5 to 7 things of just year-over-year tax planning for any small business that are always worth checking, that are always worth, putting the finger on the pulse, right? So let's dive into a few of these things, right? So first of all, what can you do to take advantage of accelerated depreciation with the capital expenditures that you invest in, right? So obviously, if you go into a business like Naturals2Go, then you're going to qualify with, you're going to be able to benefit from the accelerated depreciation. Now, I want to lean into bonus depreciation because one of the primary differences between bonus depreciation and Section 179 depreciation. So I hear it all the time. People throw the terms around interchangeably, they mean the same thing. And, I understand because they're not tax professionals and stuff, but there's a huge difference, right? And so, for example, bonus depreciation, which is what, and we're talking about the federal only because all states have their own rules when it comes to adding back accelerated depreciation, whether it's bonus or Section 179. Bonus, if you're already at a break even or a loss before taking the bonus depreciation into consideration, then the bonus depreciation will increase the loss. Whereas Section 179, you can deduct the entire amount to the extent of profit, but if you're already at a break even or a loss and it stops, it'll only offset if you have other self-employed non-passive income that flows through to your personal return that it can offset. So if you don't have that, if your personal return is just your W-2 income from your day job, right, and maybe a passive rental income because you're a real estate investor, then that Section 179 is not going to offset against that. So that's why bonus is so important because most of the time, new business owners, there's not going to be any other non-passive self-employed income that's going to flow through to the personal return other than the non-passive loss generated from the vending machine business in this context. So bonus depreciation would allow you to, between now and the end of the year, acquire the machines, place them in service, benefit from the bonus depreciation, and have it offset a good chunk of your W-2 income. And that's important because a lot of people, they got laid off, in August or September, and they had a severance, and there's $250,000 of W-2 income that's on their 2025 personal tax return that's not going to be there in 2026 because they're going to go and do the Naturals2Go full time, right? And so there's more incentive to front load it, right? So that's one huge thing, right? What can we do to optimize the accelerated depreciation, mainly bonus depreciation on capital expenditures? With a business like Naturals2Go, that's a no-brainer. Another thing that you touched on, Markel, is employing your kids. There's no age limit to employ your kids at the federal level, and then you just have to make sure that you abide by the state laws. And I'm not a labor law attorney, but I know, from what I've heard from other attorneys and just from my own research, is that as long as they're not doing anything laborious, they're not working in a sweatshop, they're working for mom and dad, and they're not doing anything laborious, then the kids can work for mom and dad. And if you're the entity, if it's an LLC, whether it's a single or a multi-member LLC, and it's wholly owned by mom and dad, and the kids are younger than 18, then they can take wages from the business, and those wages can be exempt from Social Security and Medicare tax. And so being able to do that, right, and Markel and I have children of similar ages. I've got a 5-year-old daughter and a 5-month-old son. And then, to be able to put them on the payroll, create an expense for mom and dad, right, and then not pay Social Security and Medicare tax on it for the kids, pick it up as W-2 income on the kids' return. It's, their standard deduction is going to wipe it out, no income tax. But then they also have earned income as a result of it, which allows them to put money into an IRA, whether it's a Roth IRA or a traditional IRA. And that, it's perfect sense to put into a Roth IRA and, do that, with your kid year after year after year from like age, 5 months or 5 years, and see where their Roth is going to be by the time that they leave college and go into the real world. It's going to be huge. And so there's that. And then self-employed retirement plan, that might be a little difficult in startup if you don't have a profit, but it could also, it depends. There might be some creative things there to do. You can do some like intercompany charging management fees with other companies and stuff like that. There's also putting spouse on payroll, right? Putting spouse on payroll. I would say putting spouse on payroll and a self-employed retirement plan are things that really apply like once there's actually profit. And again, there might be some creative things to do if you have another company to be able to, charge intercompany management fees and stuff. But another big thing is accelerating as many 2026 expenses in 2025, right? And so, like we're talking about the vending machines, but, you're going to need a vehicle to drive around and stock the machines, and if you're set up as a multi-member LLC, then it's going to be taxed as a partnership. And if you and your spouse are going to be working the business together, then you're probably going to need 2 vehicles to drive around, right? So putting vehicles, capitalizing and depreciating vehicles that you may already own and converting them from personal use assets to business use assets, writing off home office, what are expenses that you were going to incur anyways for the business in the first 3 or 4 months of 2026, prepaying them in 2025 to get the loss in 2025, right? So prepaying expenses in 25 to build up the 25 loss to offset the W-2 income in 25 that may not be there in 26, right? And then also converting personal use assets to business use assets because now there's a viable business use for them. That's another big thing with year-end tax planning. And then another thing is this thing called the Augusta strategy. If you're structured as an LLC taxed as a partnership or an S Corp or even a C Corp, then you could do an Augusta strategy, which allows you to rent out your business to your you can rent out your entire house to your business for 2 weeks out of the year at fair market short-term rental rates and create a further expense on the entity, reducing mom and dad's taxable income, picking it up as tax-free rental income on the personal return. And so all of these things are, in my world, these are basic blocking and tackling things these are conversations that we're having with all of our clients this time of year. And, if someone's going into a Naturals2Go, it's just, these all apply, especially with an emphasis on the bonus depreciation of fixed assets because we're talking about vending machines here.
That's just the fact that you understand that and that it'd behoove anyone from not at least just inquiring, hey, what can I do based on where I'm at? And that's just, that's, I say it, you have to have 2 or 3 people to live a very happy life. Happy spouse, a really good CPA to move the numbers in your favor, and a really good attorney to move the words in your favor. And that's all you need.
That's all you need. Exactly. And we even talk to a lot of people, like they know that they're going to, like there are people that are going to do something. Like they're looking at this franchise or this business opportunity or this resale. And they're going to do something, but they just don't know what yet. It still makes sense, but they're going to do something. So they're setting up an LLC right now because at least, because they do have a profit-seeking motive. They do have the intention to do something, but they might as well set up their LLC now because it's November 3rd as the date of this podcast airing as Markel and I leave this podcast. So they might as well get the LLC set up now and build up some sort of loss because they are doing due diligence on a business, whatever that business may be. And, It's just a no-brainer. And the tax code is written for the self-employed because of all of these reasons, right? And so, there's just so much, low-hanging fruit. All the stuff, everyone that Markel and I are talking about here, this is what I like to refer to as, this is like the low-hanging fruit, no-brainer stuff that the tax code offers you if you're self-employed versus not being self-employed. But then also, think about the corporate employee that is, working his or her job, right? Demanding corporate job at some, tech company, for example. They're getting a nice base bonus. They get some equity, right? But these companies are so, aggressive, like they're so rapid paced that, might get bought out by private equity, and then, private equity comes in and does a restructure. It's like they're making good money, but they can get laid off tomorrow, right? They can get laid off tomorrow. And so as a hedge against this, investing in a business such as Naturals2Go and starting to ramp it up, right? Because like if that day comes, a year and a half later and they do get laid off, at least they've built up some sort of foundation to generate another income stream in their household, as opposed to completely getting, blindsided and having to. And then again, it's like, if you were like in this scenario, like if you're working this corporate job, you don't really have job security, you might get laid off whenever. So you might as well do stuff like so if you have an entrepreneurial spirit inside of you, like a drive to do something self-employed, it's going to be much easier to kind of get all your ducks in a row and do that. Not only to start the ramp up phase while you still have a W-2 income coming into the household, but also it's much easier to qualify for SBA financing, for home equity line of credit financing, while you actually have W-2 income versus not having the W-2 income. So what's your whole 2 cents on just a message out there to people that, to that avatar that I just described, Mark?
Yeah, I tell them right out of the gate, I'm here with you. And I say that genuinely because I sit on a lot of cases, with operators to be, candidates, even current operators that are in that tech world. And it's not just that they can lose their job because private equity comes in and acquires and restructures. AI is replacing people's jobs, especially in that tech sector. And the other side of it is they're getting burnt out or aged out. Hey, I kept my job, but I'm doing 5 people's job now. Or hey, I'm getting older and these people are looking at the bottom line. They want to bring in someone they can pay maybe half of my salary and start them off fresh. There's just they're getting hit from every angle. And that tech sector, I work with so many people that they come to this, they understand our model, and they actually help us build out stuff. Whether it's back because they understand technology, they understand data sets, and that's really all this is we use data. We're in a data-driven age, and now we're starting to enter in this AI-driven age where we're using all that data we've collected for 25 plus years and using it to do things that remove the monotony of people's lives. So that's something that, whenever I hear people who are worried about their job or, hey, I'm doing so good here, but I've got this anxiety, I'm always on the other side like, wow. I couldn't imagine having to go to bed every night, sit across the dinner table every night, go on those family vacations and not know what I'm coming back to on Monday. And then when you have this in the background, you're growing it, and it's like a wolf pup. It can get real big, but it's a controllable wolf pup that you can scale when it comes time to. So, hey, you get that bad news that you're being let go, you're being downsized. Okay, I already had this in the works for this exact moment. And that's really what life's about. Whether you're getting life insurance, whether you got car insurance, you don't get it because you're going to go off and get in a car accident. You're going to go off and die. Because if that stuff happens, it can really derail everything you've worked hard for. And you behoove yourself not to. At least be curious enough to look into it.
Right. What can you do to protect downside risk? Let's talk about, for example, like the real estate professional. Now, whether it's a real estate professional or a real estate investor, but you hear a lot of times like W-2, high earner W-2s, they invest in real estate. Like they have like a real estate portfolio and that's about it. And, and like depending on what they do with their W-2 job, they may qualify as a real estate professional or they may not. And thus they may just qualify as a real estate investor. And then that has implications on, is there passive income or non-passive income? And then also there's the short-term rental loophole. And then if you are able to have non-passive real estate rental income, do you do a cost segregation study to accelerate the depreciation? So those are, like basic blocking and tackling things that a lot of people, in real estate, again, whether they're real estate professionals, real estate investors, like those are the strategies, those are the tax strategies that they, immerse themselves in year over year. But, like that same avatar, right? That high earner W-2 that has a real estate portfolio that, may or may not be classified. They may or may not be classified, or their spouse be classified as a real estate professional or not. That type of person might be very interested in vending machine because it's fixed asset, right? Similar to real estate, but there's a lot of opportunity. But this is, whether they're a real estate professional or not, right? Whether they're a real estate professional or not, the vending machine business is going to be a non-passive activity. And so that startup loss from the combination of ramping up, especially if you're doing it now in Q4 of the year, and the bonus depreciation of the fixed assets is going to create a non-passive loss that's going to be able to offset W-2 income that, again, depending on who we're talking to, because everyone's situation is different. But if it's someone with real estate, and they're not a real estate professional, they might be, and they don't want to, they don't have time between now and the end of the year to go find a short-term rental property just for the short-term, to be able to take advantage of the short-term rental loophole with a cost seg, create a loss for it on Schedule C of the personal return. Vending machine might seem more of a, diversificate, an investment diversification strategy that they want to be able to do in order to understand a new business, but also get some immediate short-term benefits. So what's top of mind for you when you talk with prospective Naturals2Go business owners that also are real estate professionals and or real estate investors?
Yeah, I love them right out of the gate because the way their brain works is scalability. Whether it's buying another property, they already understand it's not just about one, it's about 10 or 20. So they already come to it with this mindset of, okay, I'm going to get it under my belt, figure it out, and then scale it. But the beautiful thing also is a lot of those individuals that are in the real estate world, they've got natural connections with commercial real estate as well. That can be a great segue into getting some sites. You match that natural network with our expertise when we come to your market and we're doing that locating for you. It's a match made in heaven. Real estate professionals, not to generalize, but they're typically extroverted individuals. They like to be a part of the crowd. They like to network. They like to be in their community. They like to be the person that people speak to and they like to speak with. And this is a perfect business for them to massage some of those same things that real estate does for them, but in a whole other complementary industry.
Yeah, some great points there, especially with the ability to go into to be able to put income producing assets, right, vending machines in commercial real estate that they may already own, right? That's a good synergy right there. The real estate professional, the real estate investor understands scalability. So some great points there, Markel. Lastly, let's talk about that pre-retirement individual, right? Or even the person that may already be retired, right? Someone's retired and they've got passive income coming into their, they're living off of retirement distributions, maybe some pre-tax, some Roth, but whatever's taxable, right? They're living off of some taxable retirement plan distributions. They're living off of interest income, dividend income, capital gain income, maybe some rental income. But more and more, I'm seeing a lot of this. I'm sure that you are as well. People in their, we know that a lot of people are still working, but even people in their 60s and 70s, they can't sit still. I know so many people that'll tell you when they stop working or stop being active doing something, that's when they're gonna so many people in their that are getting up there in age, in their 60s and above, they'll be the first person to tell you that once they slow down, that's when they're going to start dying. Not my words, their words. And so, but if you're in your mid to late 50s and you're going into your 60s, or you're already in your 60s and you want to throw your hat in the ring and try something new, and you want to be able to benefit from the tax benefits as well, being able to, again, same scenario as our original avatar at the beginning of the podcast, Tommy, right? Tommy's working or just got laid off and has W-2 income that he's trying to offset. But now the person who's retiring, we'll call her Mary Sue. Mary Sue's about to retire, or she is retired, and she's entrepreneurial, and she's got all this pre-tax IRA money, to be able to take a distribution, and she's not going to get hit, if she's older than 59 and a half, she's not going to get hit with 10% penalty. So to be able to, time a taxable distribution with the startup business loss in Naturals2Go, to be able to have that startup business loss with all the depreciation offset the taxable distribution, that is a great tax strategy there for someone who wants to go into this. And then also, like, depending on how many more machines that she invests in as time goes on, and if she's only, it might make, it might create a situation where very little or none of her Social Security income is taxable, as opposed to 75% of it, because the Social Security, without the loss from the vending machine business, the Social Security income with the taxable retirement income, generated the majority of the Social Security income being taxable. So, and then also it's great tax implications for someone who's pre-retired or about to, or currently retired. But it's also just a good lifestyle choice for them, because it keeps them active, it keeps them engaged with something that can generate income and wealth for them.
And I'd say, that's something that, there's only so many games of pickleball and rounds of golf you can play in retirement. And it's something that, I love when I work with those individuals, because they'll typically start off their process and you can sense a little bit of anxiety on the horizon. Like, I didn't save enough to keep this lifestyle up, or hey, once I retire, I'm just kind of an afterthought. And with this business being so community focused, so engaged with listening to your customers at your factories, at your dialysis centers, your urgent cares, your co-working spaces, et cetera, being able to be a part of something. And every time you walk in, it's a little different. You're in a dialysis center in the afternoon. Later that evening, you're probably at an urgent care. You're in a factory. You're, 11 p.m. you go into a, third shift factory, switching over because you want, you're part of something that you feel that camaraderie. And there's something out there where you feel like you're not just helping, but you're helping people be helped the way they want to be helped. It's not something you're just putting out there saying, hey, I'm going to build it and they'll come. You feel that sense of collaboration. And that's something that, I don't care how old you are, once you feel that sense of collaboration, that's when you truly feel included. And, they want something meaningful. They want something to keep them engaged and connected, but without feeling like another job. They just spent the last 40, 50 years of their life working 40-hour weeks, 80-hour weeks. They don't want another job that's going to keep them away from family and birthdays and vacations and school plays and sports. They want something that they can be on that golf course and they're on their phone managing a business. So now they're able to live the best of both worlds. And that's something that truly is special to Naturals2Go. You don't have to sit in front of your machine all day. You go and check on it and you get back. That's why it's semi-absent. It's not passive. You're not going to just set it, forget it, and it's just collecting money. You're setting it, you're course correcting, keeping it up, you're maintaining it, and it gives you something to do. Sometimes people just need something to get them out of the bed in the morning, and this is a great business to do that. So that way in the afternoon you can go out and play that golf and that pickleball.
Absolutely. And then when the head hits the pillow at night, it's just like, boom, no problem sleeping. It was a good, fulfilling day, and do it all over the next day.
And you're growing something, for the grandkids, the nieces and the nephews, and yourself.
Exactly. Yeah. Well, Markel, it's been an honor knowing you, man. Like, you and I, we've known each other for about, I want to say, like 6 months now, and it's just been like, we've been like two peas in a pod, and it's been great. And so I look forward to doing this again. Naturals2Go, and I've been aware of even though you and I have connected recently, I've been aware of Naturals2Go for a while. It's a very reputable brand, and so it checks the boxes. Great investment opportunity. It comes with great tax benefits, and it also checks the box of lifestyle preference. For people looking to have a lifestyle that they're trying to get into. And so for anyone that wants to learn more about Naturals2Go, to see if it's a good fit for them, how should they get in touch with you?
Yeah, they just reach right out, Markel at naturals2go.com, and we'll take care of you from there. And, one other thing, I'll leave you with, and I'll take my glasses off and come real close so you can see me in the eye saying this. We're not perfect. We promise to make things perfect, though, for you. And if they break, we're going to be there for you. We're in this together.
That's a great way. Yeah. And welcome to entrepreneurship, right? It's, and you've said multiple times on today's episode, it's, a part of the day-to-day is to observe and course correct, right? That's the daily life of an entrepreneur, right? And so to expect perfection, right? But it's not going to, no one's perfect. And so, but, your your commitment, Markel, and Natural2Go's commitment to supporting your operators is world class, top of the notch. And so I hope that people listening today that are interested reach out to you, make it a win-win between them and Naturals2Go. And let's roll this back and do it again sometime, brother. Thank you so much for being on Reader's Playbook.
Let's get to it.